Welcome back to the Wyckoff Crypto Trading Lab market update. This is update number 10 on February 22nd. So let's look at the markets. Well, a very interesting day, going into Monday with so many news. And I'm not going to go through the news, although I'm hearing from Alessio and other sources. So Jalen Allen's comments, then the sale by one of the big whale account holders, a substantial amount in Bitcoin and repositioning it from Coinbase to another exchange hidden location, and some other news as well. Whatever it is, we would be looking at the charts from a technical point of view. And obviously, it really sucks when something like this happens and you're in the position and you have some kind of stop loss, let's say somewhere here, or even long-term holders somewhere here. So this really sucks. I mean, for the long-term investors, you're protecting enough all of your profitability, and then literally in one bar, you could be out of this position. We'll talk about this in a second, and how to possibly mitigate this, but I don't have good solutions for you guys on that. So let's start with the Bitcoin. So Bitcoin is producing another shakeout bars, reminiscent of something what we've seen before. And this is the futures contract, so it looks slightly different. But these three bars, they kind of have the same type of nature of where there was a shakeout. And the reason why there is no demand tails here is just because of the futures. But usually you would see this type of behavior where there is the tail around this area. So comparing the results of it, smaller spread compared to the previous big spread and smaller volume signature. So that tells us that selling was definitely there. I mean, selling relative to what we've seen on the way up, even on the bars like this and this, was much more. So selling locally is increasing. Yet, relative to or comparative to the previous selling, where we look at the big volume spike at the beginning of the year, then we see that there is less selling. And that's a very important point for us, because there is less selling, and then right away we see in the demand tail some buying. So I would be thinking that it still acts as the change of behavior for us, but the change of behavior could be negated and not become a change of character. And the way how it happens is, if they observe on the way down and they observe on the way up, and the price overcomes, let's say 60,000, kind of stays here and then continues to the upside. So that's what we could expect in terms of the most bullish scenario. Another scenario here is that we go up, make a high, and then kind of stay in some kind of shorter term formation, maybe even upsloping formation before we break out. The low probability scenario for me is the bearish scenario, where we might have some failure. And the failure would look something like this, where there is a bar that fails into the low of the previous shakeout bar, and that suggests that there is still some weakness, that the demand that came in on that shakeout is not that aggressive, and is not sustaining the structure. So a failure like this definitely would suggest either a much more prolonged duration of the range, or even slightly lower prices. But overall, it looks like a shakeout, and shakeout in the context of the uptrend, so that again is very suggestive of what? Of a continuation after some testing. So we need to test whatever shakeout has happened. All right, let's look at the DeFi, and let's look at other indices. So again, the shakeout, and even this acts as kind of like a shakeout type of nature of how the price moves. So every time we had a recovery, so this is a new higher high. This is a less higher high, but still a higher high. So what's going to happen next is of utmost importance to us, because would we have some kind of failure into the lower high? That failure into the lower high might suggest lower prices. So we have to be on the lookout for that for sure. But then a more kind of like subtle recovery and ability to hold would suggest a continuation. So only really kind of like 2 or 3 scenarios that we look at. Would we have that continuation to the downside? Would we have a lower high and then the drop? Or would we have some kind of testing that shows holding of the price? So those 3 scenarios. And then the second thing that you most definitely have to look at is some of the assets that are not behaving in line with the overall market and are showing some strength, where on the shakeout, you have maybe like a less of the result. And obviously, Avi is not necessarily 100% that type of asset, where we see a comparatively completely different behavior. We still have a down bar with the same type of demand tail, but I just wanted to show you some example of that. All right, let's look at some of the actually all of my positions that I have, except for Bitcoin. I did not buy Bitcoin when it was trying to get out of this smaller trading range. But the rest, I'm still holding except for the link. So, and this is what happened with me with the link. So as you guys know, I was buying here on this bar, going through this shakeout that held. So my stop loss, if I remember correctly, was around this area right here. So the assumption was of the continuation, and this would act at the breakout at the point of no return. Obviously, I'm out because I had a stop loss on this particular asset. Now, it shook me out before, and a lot of you recommended, that a lot of those shakeouts, going to take you out of the position. So this is something new to me, as I've been trading this market for the last, couple of weeks. So I actually did not put any of the stop loss on other assets. Now, having said this, I would never recommend to any of you, to any of my students, not to put stop losses. It's just that the amounts that I'm trading right now in cryptos in this testing mode are not that large at all. So I have the ability, not to sweat even if I lose all of it. So I don't really care about the stop losses so much. So like with the position with the Ethereum, that's just ridiculous. This drop, and I'm sure all of the stop losses, like 1, 2, 3, 4, 5, 6, 7 levels of the support, all of them were triggered. So this is just insane. And this is on such a thinly, liquid event. So it's just unfortunate. I'm sure that some of you would be caught up in this type of shakeout close of the position if you're using the stop loss. Having said this, if you have a substantial amount invested in the asset like this, you should use the stop loss, absolutely. So just to be clear, I'm not advocating not using the stop loss. It's just in my case, it just happened to be that I didn't have some of the stop losses on some of the positions. So what would we be expecting here? I think that the main assumption here is that we are this shakeout type of bars. They define, 2 things: a change of behavior and a change of behavior that leads to a trading range. So that's what I would be expecting. Some kind of trading ranges, either smaller trading ranges or larger trading ranges, where we still have to go through the testing process and make sure that whatever supply as a consequence of this action came, it's being tested and it's being observed. And again, obviously, pay attention to the assets that are behaving much, much better. That, looking at those, when you look at those, you would never even think that a shakeout of this type of magnitude has happened somewhere else in the market, and it was spread out throughout all of the crypto assets. So Polkadot right here is doing really well. My position was open right here. This is not necessarily my setup. I did not like that trade, but so far it's unfolding okay. And then obviously you have to manage, what's happening with your trades. We'll talk about this a little bit more once we go into the paid subscription, in the educational series. And with that, that's it for today. Thank you for watching, and I'll talk to you guys tomorrow.